There's a quiet revolution happening inside Wall Street's marble towers. It's not about stock tickers or interest rates, it's about blockchains. The same institutions that once mocked crypto are now quietly rebuilding finance on-chain. And leading that transformation isn't Bitcoin or Ethereum, it's Solana, the network moving trillions in stablecoins and tokenized assets at lightning speed. This isn't hype, it's infrastructure, and it's where finance is heading next. Welcome to Plugged In Crypto, where we break down ideas, news, and charts. Let's dive into why Solana is becoming the financial system's new operating layer. To understand this moment, you have to zoom out a bit. For decades, finance ran on closed networks like SWIFT and Fedwire. These legacy systems were built in the 20th century, patched together by intermediaries. Then came blockchain, open, permissionless, auditable in real time. Ethereum showed decentralization was possible, but not at Wall Street speed. When billions move in milliseconds, latency kills profit. Solana solved that problem with its incredible speed. It can process over 65,000 transactions per second, with finality under half a second. And fees? They're so small they round to zero. For traders and fund managers, that's not just a gimmick, it's a game changer. In modern markets, efficiency equals yield, and that's why the big names are here. Visa is testing USDC settlement on Solana, and MasterCard is exploring tokenized payments. Franklin Templeton is running a US government money market fund entirely on-chain. They didn't choose Solana for ideology. They chose it because it works. Behind the scenes, market makers like Jump Trading are building on Solana for real-time liquidity. In finance, whoever settles faster wins, and Solana's architecture delivers that speed and certainty. This is the turning point, where crypto stops being a side bet and becomes core infrastructure. Just like oil fueled the 20th century economy, throughput is the lifeblood of digital finance. And guess what? Solana is leading the charge. It's not just about meme coins anymore. It's about the backbone of tomorrow's capital markets. Think tokenized bonds, fractional treasuries, real-world assets streamed at lightning speed. Here's the twist. The Wall Street that Bitcoin tried to escape is now using crypto to rebuild itself. They're not just speculating on Solana, they're adopting it to recreate a more efficient financial system. Ethereum is the decentralized layer for ideology, but Solana is all about performance. This is the divide: freedom versus efficiency, and Wall Street always bets on efficiency. In a world where microseconds matter, execution moves capital, not philosophy. So where does this lead us? Imagine Treasury bill yields updating in real time, cross-border settlements finalizing before your coffee cools, liquidity flowing 24/7, permissionless yet compliant. That's the hybrid system forming now. And Solana? It's the engine room driving this change. It's ironic, but the blockchain once seen as too centralized is now decentralizing the very structures that mocked it. As value migrates on-chain, Solana's speed and cost make it the go-to for tokenized finance. Bitcoin became the hedge, but Solana is becoming the bank. And yes, it might feel like a Wall Street takeover, but this time it's happening in code. If you found this interesting and want more deeper dives on real subjects, please subscribe. Always stay plugged in.